India has over 1 billion telecom subscribers, making it the second largest telecom market in the world. Now, this just shows how crucial the telecom industry is for us. It's like the backbone of our digital lives. Whether it's communication, online shopping, or everyday tasks, we rely on these services. But here's the twist. Even though the telecom sector is so important, it has gone through some rapid changes. Some good, some not so good. Now, ever since Reliance Jio entered the market, things have become fiercely competitive. Jio came in with super cheap plans and even offered free services at times. Now, this forced other telecom companies to drop their prices just to stay in the game. Now, as consumers, we're happy because we're getting lower tariffs and better services, but for the telecom companies, it's a tough deal. Their profit margins have become razor thin because they're earning less per customer. Now, if you take a look at this chart, you'll see how Jio's entry affected Airtel's ARPU, which is how much they're earning per customer. Now, before Jio, Airtel was doing well, but once Jio was launched, Airtel's ARPU declined to just Rs 115 by fiscal year 19, which is a huge drop. And the return on capital employed also took a hit. Now, Jio's aggressive pricing also caused many smaller telecom companies to struggle. Some merged like Vodafone and Idea, while others like Aircel and Tata Teleservices simply couldn't survive the competition and exited the market. Now, we've left with 3 big private players, Reliance Jio, Bharti Airtel and Vodafone India, and one public player, BSNL. Now, one more big thing is that running a telecom network isn't cheap. These companies have to spend a ton on buying spectrums, setting up infrastructure, and now with the shift to 5G, the costs are even higher. Now, they also have to pay license fees to the government. And on top of that, they have to navigate a complicated regulatory landscape with ever-changing rules, which adds to more uncertainty. So we see how difficult it is for these companies to keep growing and making profits when their costs are skyrocketing, but they can't raise prices because of fierce competition. Now, that's the tricky balancing act the telecom industry has to manage. And there's also a great quote from Warren Buffett that really hits the nail on the head when it comes to businesses like telecom. He says, the single most important decision in evaluating a business is pricing power. If you've got the power to raise prices without losing business to a competitor, you've got a very good business. But if you have to have a prayer session before raising the price by 10%, then you've got a terrible business. Now, think about how this applies to the telecom industry. Companies like Vodafone and Airtel are stuck in a super competitive market. They can't raise prices because if they do, customers might just shift to cheaper options like Jio. This lack of pricing power means their profit margins are tiny, and it's really hard for them to make big profits even though telecom is such an essential part of our lives. Now, coming to the Vodafone story. Now, back in 2007, Vodafone decided to enter the Indian telecom market by buying a company called Hutchinson. They paid a whopping $10.9 billion because they saw how the telecom industry was becoming a big deal in India and they wanted in on that action. Now, fast forward to 2018, Vodafone wasn't doing great on its own, and neither was Idea Cellular, which was another big telecom player. So they decided to merge. Now, why did they merge? As we discussed, one big reason was competition, mainly from Reliance Jio, which had completely changed the game by offering super cheap data and free voice calls. Now, this made it tough for older players like Vodafone and Idea to stay profitable. Now, before the merger, both companies were struggling. For Idea Cellular, profits started to drop around fiscal year 16, which means they were making less money and seeing their profit margins shrink. Now, Vodafone India wasn't doing any better. They went from making profits to facing heavy losses in 2016. Now, the merger was supposed to help them save costs and become a stronger, bigger player. And for a while, it looked it might work. After they merged, they became India's largest telecom company with over 37% market share. But here's when things went wrong. As of March 2024, they now hold just about 19% market share. So what happened? Now, Vodafone India has been stuck in a huge debt trap. Over the years, they've spent a lot of money on buying spectrum licenses, which are the airwaves telecom companies need to offer mobile services. Now, also building out 4G infrastructure and keeping their daily operations running in a market as competitive as India. Now, all these expenses piled up, leading to a massive debt burden. Now, this debt was so big that Vodafone couldn't invest in new technology or growth because they were too busy just trying to keep up with interest payments and running costs. Now, Jio then, of course, disrupted the entire telecom industry in India. Vodafone, like everyone else, had no choice but to lower their prices to stay in the game. Now, the big problem was that Vodafone couldn't compete with Jio's resources. Jio had the financial backing of Reliance Industry, one of the richest companies in India. Now, they were able to invest billions into their network and play the long-term game, aiming to dominate the market over time. Now, as Jio's customer base grew quickly, Vodafone started losing more and more market share. The merger with Idea Cellular didn't go as smoothly as they had hoped. Instead of creating efficiency and cost savings, which is what companies hope for when they merge, the merger added even more complications to their already struggling businesses. Now, with revenues not growing as expected and competition driving prices down, Vodafone couldn't make enough profit to pay off its debt. They were caught in a vicious cycle. Too much debt made it hard to raise more money, which meant they couldn't invest enough to keep up with Jio and other competitors. This is why debt has been a huge burden for Vodafone in India, which drained their ability to fight back in an extremely competitive market. Now, then came the AGR dues, which were really a tough blow for Vodafone. So, what are AGR dues? Now, AGR dues or adjusted gross revenue dues refer to the amount that telecom companies in India are required to pay to the government as part of their license fees and spectrum usage charges. There has been a long-standing dispute between the Indian government and telecom companies about how to calculate the revenue that should be used for things like license fees and spectrum usage charges. The government wanted to include not just money made from telecom services, but also from non-core areas like interest income and rent. Now, Vodafone, along with other telecom companies, thought this was unfair and fought a legal battle for over a decade. But in 2019, the Supreme Court sided with the government and Vodafone was left with a staggering 58,000 crore rupee bill for AGR dues. Now, given their already struggling financial situation, this massive payment was just too much for them to handle. In December 2019, Vodafone Idea chairman Kumar Mangalam Birla warned that the company would need to shut down its operations in the absence of relief from the government. Now, as a last-ditch effort in June 2021, Birla even offered to hand over his stake in Vodafone Idea to an entity, public or private, to keep the company afloat. Now, when Vodafone couldn't pay these dues, it got some relief and the Indian government approved a reform package aimed at helping the telecom sector. As part of these reforms, telecom companies were given the option to take a moratorium of up to 4 years on their annual payments related to the Supreme Court's AGR ruling and previous spectrum dues. Within a month of these reforms, Vodafone Idea decided to take that 4-year break on payment for both AGR dues and spectrum auctions. Later, the government decided to convert the outstanding amount into equity, which meant that the government became one of Vodafone's largest shareholder with a stake about 33%. Now, imagine you're a landlord suddenly owning a part of your business because you couldn't pay rent. Now, what's also notable is that this help from the government was not incidental. It was part of a larger plan to ensure that competition continued to exist within the telecom sector, which was increasingly trending towards a duopoly of Jio and Airtel. Now, according to Nuama, once the government of India lifts the moratorium, Vodafone has to make payments of Rs 29,000 crore and 43,000 crore by March 2026 and March 2027. Vodafone Idea also started working on a revival plan to improve its business and also regain the lost market share. Now, one of their strategies included launching a follow-on public offer which aimed to raise up to 18,000 crore. Now, this was one of the biggest FPOs in India's history. Now, the FPO was very successful, getting subscribed 7 times, showing strong interest from global investors. Interestingly, the government stake decreased to 23% because they did not participate in the FPO. Now, the money raised would help pay off debt, settle payments with vendors like Indus Towers, and also strengthen their 4G network and also fund the launch of 5G services. Now, all of this is aimed at stopping subscriber losses and trying to win back market share. But there's also more to the story. Recently, the Supreme Court rejected a plea from telecom companies asking for a review of the AGR dues, claiming there were mistakes in how these dues were calculated and the real amount owed was much lower. The court decided the case wasn't fit for rehearing, which means that the telecos are now stuck with the current ruling. Now, to also get a clearer picture of how Vodafone is doing financially, let's look at their numbers. In fiscal year 24, Vodafone earned 42,652 crore rupees in revenue, which is just a tiny 1% increase compared to the previous year, which is fiscal year 23. Now, after accounting for their operating expenses, they made a profit of 17,000 crore, which gives them an operating margin of 40%. Now, that doesn't sound too bad at first glance, but here's where things get concerning. Now, because of that enormous debt, their interest expenses were 25,766 crore rupees, which is over 50% of their company's sales. This means that after paying all those interest costs, Vodafone ends up with huge losses overall. So while their operating numbers might look decent, the heavy burden of debt and interest payments has put Vodafone in a tough spot. Now let's talk about if Vodafone could actually revive. First off, we need to address the elephant in the room, which is Vodafone's debt. It's pretty staggering, over 2 lakh crore, which is around 2 trillion rupees. Now, this is a huge amount of money and it poses a significant challenge for Vodafone. However, they do have a revival plan in place that involves bringing in new investors and leveraging some support from the government. Recently, the government also increased the tariffs that telecom operators can charge their customers, which is a positive step for Vodafone's revenue potential. Now, in the first quarter of fiscal year 25, Vodafone also managed to reduce its interest cost to rupees 5,500 crore, which was better than expected. Now, this improvement was thanks to some new investments and converting parts of their debt into equity. Now, if they keep pursuing the strategy of debt to equity conversion, they could further reduce their interest costs, which would help their financial situation. However, reducing that massive debt to a sustainable level is still going to be a real challenge. Now, according to analysts from the Macquarie Group, even if they raised prices by 20% and kept increasing them by 10% each year, it could take them more than 20 years to pay off what they owe to the government, assuming there are no write-offs. Now, this highlights just how tough their situation is. Now, we can't ignore the intense competition Vodafone is facing in the telecom market. A big part of their struggles comes from rivals like Jio and Bharti Airtel. Vodafone has been losing subscribers and market share consistently over time, as we just discussed. One of the reasons for this decline is also because that they lack robust 4G services and haven't expanded their network significantly. Now, since merging with Idea, they've lost more than 20% of their market share, which is pretty concerning. Now, as we look ahead, the Indian telecom sector is on the verge of a major shift with the rollout of 5G services. This is expected to drive the next wave of growth. But Vodafone's financial troubles could push them further behind competitors like Jio and Airtel, who are actively expanding their 5G networks. Lastly, we have the issue of capital. Now, Vodafone is struggling to raise money to invest in crucial areas like expanding their network and developing 5G technology. Now, this lack of funds is a major constraint that limits their ability to compete effectively and attract new subscribers. Now, let's wrap this up by looking at what it means for Vodafone moving forward. Now, the road to recovery for Vodafone is going to be a tough one. It's clear they're going to need ongoing support from the government and a bit of a break from the intense competition in the telecom market. Right now, they're lagging behind their main rivals, Bharti Airtel and Reliance Jio, especially when it comes to things like 5G coverage and the money they're investing in their networks. You see, 5G is the next big thing in telecommunications. It's faster, more reliable, and can support a lot more devices at once. But Vodafone hasn't kept up with necessary investments to expand its 5G infrastructure, which puts it at a disadvantage. Now, if they want to compete effectively, they'll need to catch up quickly. Now, let's talk about profitability. For Vodafone to turn a profit again, they might have to keep diluting equity. This involves selling more shares to raise money. While this can help pay down their hefty debt, it can also be concerning for existing shareholders. Because when new shares are issued, it reduces the percentage of the company that existing shareholders own, which can lower the value of their investment. And then there's a question of pricing. We've talked about how competitive the telecom market is. Well, while it's reasonable to think Vodafone could raise prices to improve profitability, there's no guarantee that will happen as much as they need. Both Bharti Airtel and Jio are already profitable and they might not feel the pressure to increase their prices. This puts Vodafone in a tough, tight spot, limiting their option and flexibility to adjust their pricing strategy. In summary, for Vodafone to actually make a real comeback, they'll need a supportive environment from the government and a shift in the competitive landscape. Without these, it will be an uphill battle for them to regain their footing in the Indian telecom market. Having said that, this is me, Merlin, signing off. Take care and stay invested.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.